As physicians, you are some of the highest income earners in Canada. But if you ask me, it's not about how much money you earn, rather it's about how much money you keep at the end of each year. Hi, my name is Junaid Osmani, and I'm a tax partner here at SRJ Chartered Accountants. In this video, I'm going to talk to you about the 5 most common mistakes that many doctors make that sabotage their financial success. So the first common mistake that many doctors make is they wait too long to incorporate. Now you've completed your med school, finished your residency, and now all of a sudden you're making those big bucks. The last thing you want to do is wait too long to set up your professional corporation. I know we've already talked a bit about this in one of our other videos, so if you haven't seen that, please click the link below. But now, the gist of the story was, from that video, we had Dr. Tax a Lot, who waited too long to incorporate and thus paid nearly twice as much in taxes than Dr. Tax a Little. Right? So the moral of the story is, regardless of whether or not you have student loans or what your financial situation may be, you may want to go ahead and incorporate your practice as soon as you complete medical school and are in a position to do so. A second common mistake that many physicians make is not filing their taxes on time. In all honesty, this one is pretty self-explanatory, and there's no good excuse for not filing your taxes on time. The penalties for not doing so start at 5% and can get as high as 50% of the taxes you owe. Even if you don't have the funds to pay those taxes at that very moment, you still want to file your taxes on time so you're not stuck paying unnecessary penalties. So now that brings me to my next point, not making your CRA payments on time. Whether it's installments or your end of year taxes, you need to make sure that these are done in a timely manner. Once you've filed your first corporate tax return, the Canada Revenue Agency will most likely ask you to start making monthly remittances to them. So rather than owing a large lump sum at the end of the year, you're going to have to start making monthly payments to them throughout the course of the year. If you fail to do so, they're going to charge you interest for not having done so. And again, this is something that can be very easily avoided. At SRJ, we have our staff work with our clients routinely, navigating them through their online banking, helping them set up future dated payments so that you just set it up once at the beginning of the year and don't worry about it till the following year. This way, you've set it up and can forget about it, and your payments are being done on a monthly basis to the Canada Revenue Agency. Thus, you're not having to pay any interest when you don't have to. So the fourth point that I want to talk to you about today is not knowing when to work with a professional. When it comes to setting up your corporation, this would be a good example of a good time to work with a professional. Many people think that you can easily go online and register a corporation quite easily. But the reality is the CPSO has very strict guidelines, rules, and restrictions that if they're not properly met, the CPSO will deny your license to practice medicine through your professional corporation. Furthermore, the Canada Revenue Agency also has rules and regulations that must be followed, and if your corporation is not properly set up, they can easily deny a dividend payment to a family member. In either one of these scenarios, this will cost you tens of thousands of dollars, which could have been easily avoided had you sought professional guidance at the right time. Last but not least, I want to talk to you a bit about budgeting from your corporation. To me, this is one of the most common areas where many physicians are having a lot of problems. This leads to a lot of undue hardship and paying more taxes than you really need to. Whether it's budgeting the purchase of a new home, buying a new car, or just managing your monthly expenses, you want to make sure that you create budgets not based on how much money your corporation makes, but rather how much money it's reasonable for you to pull from your corporation on an annual basis. Just because your corporation is making $400,000 a year doesn't mean you want to be living a lifestyle that supports $400,000 of costs a year. Because if you do that, it can cost you an arm and a leg in taxes. If you have any questions about any of these topics, feel free to schedule a free consultation with one of our partners, and we'd be happy to be of assistance.